It's time for another panel discussion. The topic is quite interesting. Existing payment infrastructure versus stablecoins. I would like to ask the panelists to introduce themselves.
Hi, thanks first and foremost for having us. I'm Robert Kopic. I'm the moderator of today's panel. I'm also in a second life the Secretary General of Blockchain for Europe, and we have a very good panel today, which I will quickly present as we're having an educational sprint today. So in no particular order, form, or ranking, Patrick Papsdorf from the ECB, he's the head of section of payments oversight. Jan Kühne, Börse Stuttgart Stacks, is representative for sales and partnerships. Sebastian Müller, Commerzbank Business Consulting, he's the senior project manager. And Teresa, you already met. She works for Cash on Ledger as the product owner there. And thank you all for taking the time for it today. And as we don't have much time, I would like to directly go into medias res with the first question to the ECB, as you're the institution that basically oversees, as the title nicely outlines, existing payment infrastructures, and probably also have an opinion about stablecoins. I would like to ask you, how would you see the change that stablecoins brings to existing payment system? What's the view of the ECB on this? Please, the floor is yours, Patrick.
Thanks a lot, Robert, and hello to all of you. Pleasure being here. So let me be fast. Time is scarce. So of course, when we look at the payment system holistically, we have seen and we're seeing a lot of change, particularly due to technological advance and digitalization. From an oversight perspective, we see new payment services, new payment systems, new payment solutions coming up. Stablecoins are one of them. Instant payments, for instance, is another one. But not only on the supply side, also the demand side, we see, of course, changes, or at least more pronounced requirements for convenient, fast, low-cost services that are also secure. And COVID-19 likely accelerated this demand. So when we look at stablecoins specifically, there are, of course, also an evolution that could bring further innovation in payments. And they have potentially also a response to the need of cross-border payments and remittances. However, stablecoins, when we look at them, I think we see some similarities and differences to what exists today. And let me make this on 2 points. The first one, stablecoins are usually associated with the use of DLT. But of course, we know DLT is not only used by stablecoins, also by existing actors, by different actors. So it's not really a criteria that distinguish them entirely from the rest. But we are, of course, aware that DLT has a potential and has also potential for novel services. I think very important from our perspective is that all players, whether stablecoins or others, are fully aware of the technology, of the risks it can bring, but also about any reliance on third-party providers. As a second point, I would like to raise that when we speak about stablecoins, we usually speak about stablecoin arrangements. And these arrangements, they can be potentially complex in terms of the players, in terms of the functions they have. And also here we can draw some similarities and also differences to the existing payment system. For instance, on the issuer function, and I think Sebastian earlier referred to MiCA, and here the EU regulation MiCA makes a clear link between e-money tokens and e-money. So something that's already in place with a very important requirement for an end user to be able to redeem at par in fiat currency at any time. But it doesn't stop there. Of course, there are some further requirements, that is the difference, because some stablecoins could potentially play a large role, and therefore they may be subject to higher requirements and higher supervision, as it's outlined in MiCA for significant tokens. If I look, for instance, at another function, the transfer function of a stablecoin arrangement, so the transfer of the value, this of course resembles closely payment systems and the function of payment systems. Of course, here also are differences in the means that are used, in the participants, in the interdependencies. But overall, still the principles, the oversight principles would still apply, whether it's a transfer function of a stable coin or whether it's a traditional payment system. So overall, I think we can say that stable coins have the potential to serve as a means of payments. Of course, one needs to see how far business and consumers are picking them up. Important from our perspective is, of course, that they meet the regulatory and that they meet the oversight requirements. So coming to your initial question, so stablecoins, they resemble existing functions, existing offers to a certain extent, but of course, the risk can be different and can be also higher, in particular when we speak about global stable coins or when we speak about multi-currency tokens. But those stable coins that are compliant with the requirements, I think they will add to a further competition in the payments ecosystem. I know I have to stop here most likely because of the time.
Thanks, Patrick. Very much appreciated. I know you could have probably elaborated for another hour about this. Unfortunately, we don't have it. Otherwise, I would happily give it to you. Jan, working at Börse Stuttgart, you're obviously at the forefront of the discussions about this topic. When you look at Europe, and I think Patrick just mentioned it, that there's a regulation called MiCA, which has, when you look at it, has very stringent rules in place for stable coins, pretty much making it very difficult for anybody that is not a bank issuing a stable coin. What's your view on that, especially as you, as Börse Stuttgart, you're also involved in the space?
Yeah, Patrick, thanks first of all for having me. Well, I think earlier today, Philip mentioned some total numbers on stablecoin. Maybe to put some color on that, 50% of the settlement and Bitcoin trading is settled in Tether at the moment. And if you look at the Binance spot market, under the first top coins, you would only see pairs having a stable coin on it. And you would probably go to number 18, 19 until you find a fiat coin. So from a global perspective, stable coins are already there. It's not about what this will bring in the future, but from a trading perspective, at the exchanges, stablecoin are a major player there. And that is for central exchange. And looking in the DeFi world, decentralized exchanges, they only function on stablecoin. They have the on-chain settlement built within it. So fiat is not even taking any part in those, except for maybe being a collateral for some of those stable coins. So I think Europe has to open up for stable coins. And actually, I don't see that happening with having a look at the MiCA, because for me, and I think others see that similar, MiCA has one purpose amongst others, and that purpose is to hinder and impede the usage of global stable coins. I see the point that regulation is lacking here. I see the risk, especially Tether has for the ecosystem in crypto. And I see that regulation has to be taken there, that we at Börse Stuttgart Digital Exchange, being a regulated trading venue and MTF, of course, we follow these rules, and it helps us in our business because our customers, both retail and institutional, they cherish us being a regulated MTF. But still, we see that Europe could fall behind and is falling behind if stable coins are not adopted in that regard. So I would be happy if the regulation here would be more open, if the thresholds would be higher, and crypto asset service providers and MTF could adopt stable coins as is already adopted from a global perspective.
Thanks, Jan. Coming to you, Sebastian, looking or hearing what Jan just said, is the biggest challenge towards the next level payments infrastructure regulation, or are there other issues that might stop it from happening?
Thank you, Robert. Let me just start with this. I want to make clear I'm working for Commerce Business Consulting, and I'm here to represent the point of view of Commerzbank in the field of digital money and stuff like that, because there's a difference. And coming back to your question, I would like to add something here, because we are always just talking about the regulation. From my point of view, I would to add here the technical point of view, as we see, for example, within Commerzbank, that the digitalization is something that is happening outside the bank and inside the bank, and regulation forces us to do so in some points, but we also want to improve our business. We have a situation, you heard it in the news, that the bank is changing, and I think the bank is changing in that way that we becoming a more digitalized bank, and therefore we are going, for example, for cloud technology. And the cloud technology as itself is another game changer, which is coming from technology. And DLT is something which is working distributed, so we need the cloud. So I would say, if we're talking about payment infrastructure, this is something we have to have in mind. And I think I think the regulation, which is, for example, MiCA, and there are several other regulations that needs to be considered. Are from my point of view, they realize that the business itself is changing, and I think it's good that we are making so good progress here to have a more realistic point of view in the regulation when you compare it to the day-to-day business.
Thanks, Sebastian, for this very important point. Last but not least, Teresa, question for you, listening to all of that. How can pay-per-use models be integrated best in today's payment systems? And maybe to add to this, which solution would be also appropriate for IoT payment systems? Could you maybe elaborate a bit on that?
Yeah, thanks for that or those very interesting questions. And yeah, I think it is really important to actually take a look onto the real life use cases, what is actually happening in the industry. So on to your first question of how we can best integrate pay-per-use models into today's payment systems, I would say that really strongly depends on the identity solution for machines that we have and that we use, and how the connection to bank accounts or other payment service providers looks like. Pay-per-use as such doesn't need stablecoins, but it needs programmable payments to further enhance automation and seamless process integration. From this perspective, of course, a link between DLT and payment infrastructure would be extremely helpful. This, for example, could be a trigger solution which allows for the settlement of smart contract-based transactions on the one hand, but could be integrated with the conventional payment systems. The big advantage I see here in such a solution is the quick development and application. What of course would bring great functional benefit, but also acceptance through the credibility of its issuer, are solutions like programmable commercial bank money and digital central bank money. And yeah, I mean, which solution is appropriate for IoT payments really depends on the specific business case. For those that have listened to my presentation before, as I've outlined, we always need to think business first and what is fit for purpose and what really helps the business. And at this stage, yeah, we mainly see two alternatives. One being request to pay or something similar, and on the other hand, blockchain-based payment systems as the ones I mentioned before. And maybe to quickly give some more input on that, request to pay, for those who don't know it, it's basically a payment request that precedes a payment. So this message contains all the information about the transaction, and if the customer confirms it, triggers the transfer in the end. And therefore it can maybe rather be seen as a messaging service and not strictly speaking new payment instrument. But yeah, payment requests in a request to pay are always initiated by the payee, and then in doing so, the payee can give an expiration date, including an expiration time, and a desired execution date, and including a desired execution date to the request to pay. And then the payer receives the request and has the options to accept it now or later, pay now, pay later, whatever. And the payee receives then information on what the payer has decided to do. And in this way, always knows about the current status and when he will receive his money. And then those transactions are settled with normal SEPA transactions and most likely with instant payments. And that, of course, is a very fast and easily implementable solution for the industry now.
Thanks for that, Teresa. As we're slowly running out of time, I would really like to ask the panelists to give their view on how they envision the interaction between existing payment infrastructure and stablecoins in the future. And maybe we start with Sebastian.
I would like to reflect on what Patrick said and the speakers before. We need a good regulation in place that gives stability for every commercial bank, for every financial institute, and how to do businesses. And we need the regulation in place for our customers as well, because they want to have finance vehicles like stablecoins and others who fit to their purpose.
Thanks, Sebastian. Jan, what's your take on this?
Yes, again, I think regulation is key to make that clear. And we at Börse Stuttgartische Exchange, that is why we are so keen on having a regulatory framework, both for the exchange and the custodial services. But why is it so important as an exchange to have a seamless fiat and crypto payment rail? Is because usually an exchange pre-funding is necessary, and if the funds of our participant at the trading venue are not funded, they cannot trade. And that's like having an ice cream stand in the summer and running out of supply. You lose money on that. And on the other hand, having too much ice cream in the stand, it's not very capital efficient. I think we need better integration, better settlement layers via fiat, via stable coins, and via integration of both the two. And I think in earlier presentations, we see innovation taking place in that regard.
Thanks, Jan. Teresa, if you could give your take on that.
Yeah, I think I can agree with most of what has been said. And as I mentioned before, we always look on this from a business perspective. So the important factor is that any solution, whatever it looks like, is fit to purpose and implementable for businesses. And one thought maybe is that regulation is always seen as something very limiting and restricting. But I think it's important to always focus on the fact that regulation can also enable development and innovation.
And then maybe last question to you, Patrick, as to conclude the panel. How happy are you as a member of the ECB with the proposed regulation? Is this what the central banks think is necessary to tackle the risk, or did we go too far, or maybe not far enough?